So today we want to talk about some hard-hitting cash flow producing assets that are a bit recession resistant as well. So you know it, sin stocks. I love my tech stocks, especially those that pay me some dividends to wait around for the big things to hit. But I love my cash producing stocks, whether it be high yield, medium yield, low yield. Bring me the cash so we can do more in life, so we can gain that financial independence and security. So let's talk sin stocks today. Again, recession resistant, cash flow keeps pouring in. People can't do without their sin stocks. So we're going to uncover a few of these today, some of my favorites that I am presently adding to in this market environment. They make me sleep a little bit better at night and could do the same for you. And sometimes we even enjoy a little bit of our sin stocks as well. So with that in mind, let's take a closer look at the three for today. First one up is Altria, the big MO. Hey, you know it, it's Marlboro. They used to be a part of a much bigger conglomerate, slimmed it down to US type operations many years ago. But Altria, a dividend king, over an 8.2% dividend yield, 54 years of dividends. You can't beat that. Raises it on average of 3% or so a year. Compelling value. And some of these sin stocks have caught, like Altria, have caught a little win this year, but now they've pulled back and it's in a great buy zone all over again. Again, keep you sleeping at night with money rolling in while you sleep away, knowing that your bases are covered with the income pouring in on some of these stocks. Love it. Compelling value, raising of dividends, dividend king, over an 8% yield. Again, you know it as a smokes company, smokeless tobacco product, your Copenhagen's, your Skulls. They of course have your nicotine pouches. They own some cannabis interests as well. And let's not forget, they have a massive interest in that huge brewer, AB InBev, about 10%. So that is constantly throwing more dividends into Altria's coffers, which they can return back to you and I. So take a look at Altria. You want to sleep better at night, have that cash flow coming in. If you're okay with some of the sins that are out there, this one is something you're going to want to take a look at and start cashing in on this one as well. The next one along the same lines is none other than British American Tobacco, BTI. An even more mouthwatering yield, 8.6% with another 3% compounded annual growth rate. Steady grower. Company has a lot of value. Again, caught a little bit fire this year with a lot of the economic uncertainty that we're now facing. These are steady performers. They've been referred to as annuities. They just keep producing. So if you're looking for something like this in your portfolio, BTI is another one that I'm on a slow accumulation path on, and it just keeps producing income that we can throw into some of our other more interesting investments. But these are good items to have in your portfolio to maintain some value in rough times and let you sleep a little bit better at night. Again, smokeless products, kind of the vape stuff. They've got the huge Views smokeless. Iconic brands like Camel and Cool are in their coffers as well. This is a tremendous holder of value. They even have brands in China. So not a lot bad to say about this. Steady performer. They keep increasing that dividend. The value right now is compelling. It's pulled back from some of those highs. I'm adding to it right now. I'm building up that cash. I like to see that cash rolling into my portfolio so I can buy more of these types of stocks and then others, keep that diversified. But the two sin stocks we're covering today, both Altria and British American Tobacco, are fantastic additions or increases to any portfolio looking to generate that cash. We want to keep that rolling in. So The last one I want to talk about today is none other than Diageo. If you enjoy that occasional spirit on a Friday night or Saturday, Diageo has you covered. Fantastic yield, over 3%. It's averaged over 3% growth over the last 10 years. So constantly growing, including it's pulled back right now and is trading at a very compelling value. You know, just a couple of years ago, back in 2022, this was trading at over $220 a share. It can be held today for a lot less. Just take a look. With a nice yield, undervalued. These aren't being thought of right now with everything going the way of AI or other investments. Sometimes these overlooked companies, especially the sin stocks that keep producing cash and cash and cash, are the way to go to buffer your portfolio if times get a little rocky, and also provide you good cash flow and steady value. Diageo is one of those. Iconic brands, Johnny Walker, Captain Morgan, some of your vodka, Smirnoff, Kettle One, Guinness beer. They've got you covered with a lot of things. Worldwide monster, and of course they do partner with a lot of celebrities. Even purchased George Clooney's Casamigos tequila. So if you like this, if you like consuming these products, then you're going to want to be a little bit of an owner in this as well. This one, Diageo, sits in a drip account of mine. Drip, 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 drip. Every month it goes by a little bit more, and I've been doing this for years. It's a pretty healthy position right now, and I'm going to keep this going for quite a few years to come. I enjoy it, like the look of it, like the feel of these sin stocks. They're providing me with good cash. They'll provide it for you too. Let's go.